When you're talking about someone that owns a current property, their biggest thing is going to be locating that next house and be able to get their financing in line first.
Okay.
The biggest question I get from a lot of customers that currently own is, hey, why do you, of course, want to get something different? And then the next thing is going to be, what does that look like financially?
So when it comes to income, obviously, hopefully the income went up,
We hope.
Sometimes it goes down.
Yep.
In terms of the assets that they have, these move-up buyers already own houses.
Yeah.
How does that affect, I'm assuming that's an advantage, but how does that work when they're looking to buy another house?
Love that question. This is the biggest concern for most move-up buyers, which is, hey, Scott, I know that I've got this equity. How do I utilize this in today's market? And there's a lot of options for this, Matt. One of them is called a bridge loan, where customers can actually qualify without selling their current place. We, the lender, can take a portion of that equity, use it as the down payment for their next place, and allow them to be able to purchase and then sell afterwards. Now, we want to get with our lender on that, of course, and give us a jingle. We can talk through the qualifying factors of that, because the biggest obstacle for people that are buying their next property, what they currently own, is, can you sell first, or do you have to buy and then sell afterwards?
So does, the big thing right now is we're seeing properties with, 10, 20 offers. The market is currently acting a little bit crazy.
Yep.
But if you are a move-up buyer and you already own a home, but you haven't sold it yet, and you don't want to get stuck without a home, how does that work with a bridge loan? So is their offer written contingent, non-contingent? What does that look like?
Great question. Right now, if you qualify, which we can look into you for, is you can do a non-contingent.
Wow, okay.
We got to make sure we qualify. A majority of customers do. We know the equity is there, Matt. A majority of customers have a large amount of equity in their house right now. And if you get the right agent that supports you well and knows how that structures, and you reach out to us over at Treadstone, we'll look at that info to find out, okay, you have this much equity in your current property. You make this much income and your credit is this. We'll kind of do a full analysis of it. Once we find out that you have this much equity, we can take a portion of it, use that as a down payment. So, man, a lot of times people, they don't even have to come to close with any money.
I think that's one of the biggest advantages, right? Is that move-up buyers in this market where we've seen, 5 to 10% home appreciation year over year for a really long time now, they're oftentimes able to trade up from their original house into a bigger, better, more different, or more better for them house
100%.
Without actually being out of pocket any money.
Yes.
So they might hear that the market's so competitive, the market's crazy, but at the end of the day, it's about your individual financial situation.
Absolutely. And if you work with a professional, someone at Treadstone, a good professional realtor, the options are there. You just have to do the math and find out what fits that personalized need for that client to make that budget work for them.
So I want to back up for a second because you used a word that I think most of us hear all the time, but I just wanted to get a better definition of it. So define equity. We hear equity a lot. What does equity mean in regards to real estate and mortgages?
Equity is basically the amount that is valued of the home versus what you owe on the property. So I'm going to make the math easy. Let's say that you have a property that's worth $100,000 and you have a $50,000 mortgage on it. We're going to say, as a bank and a realtor, you've got approximately $50,000 in equity. And that money, Matt, has allowed that seller or that homeowner to take those funds and use that for a down payment or a portion of it for a down payment, and we can use additional to pay off other debts. A lot of times customers will come to me and they have X amount of equity in there. And what we can do is we can take a portion of that down payment and then use a majority of it to pay off other negative debts, credit cards, auto loans, student loans. Gets them in a really good spot for that next move up.
Well, it's really interesting. I mean, when you work with a financial professional who knows what they're doing, someone that's been in the business for a while, you learn things that you didn't know you could do before. A lot of people come to you, I'm assuming from what you just said, they say they want to buy another house. And I know what I've seen you do a lot is say, we can buy this house, but we can actually take the equity you have right now, pay off those credit cards, and now all of a sudden you have a lot more money left over every month because you're not paying interest that revolves and compounds daily. A mortgage, most mortgages right now, correct me if I'm wrong, but it's one interest rate, and it does not change. It doesn't re-amortize over the course of your loan unless you choose to do that.
Correct. Yeah, majority, you're right, are kind of fixed on there. And you're right. I get really excited because I don't want to say I like math, Matt, but I will tell you the math will take a lot of the guessing out. And that's where you really need to be connected with a professional, because it's as simple as working the math of, hey, you've got these debts at this interest. There's no tax deductions on it. There's depreciation on it. let's use this for here and let's use the remaining for over here. That's what I love the most, and it gets me really excited when you have those move-up buyers and they have equity, which a lot of people do now. We can get really creative and get them on a really good game plan for that next big property.
So obviously, buying a home is an awesome option for anyone, but from what I'm really hearing right now is that move-up buyers have some serious options, but you just have to talk to the people to figure out what those options are.
You nail it. And man, it's all no cost, no obligation. That's the best part. It's a lot of scary moments for those sellers and buyers to go, I just don't know what it looks like. And I always say a quick phone call, a quick hour with a professional like us. We'll talk through those with you. We'll do the math with you. If it makes sense, great. If it doesn't, we're going to get you set up to have it make sense in the future for the family.